Hello, everyone, and welcome to the Like a Tortoise channel. Happy Monday, and today I want to discuss the market turmoil that we witnessed on Friday, and this again serves as a stark reminder that long-term fundamentals are really what we should focus on instead of trying to predict what's going to happen over the short to medium term. Okay, so what the heck happened on Friday? What happened is that it made Trump essentially called out China for tightening the grip over rare earth exports. So that was part of the reason. And sure enough, what happens is that he mentioned that the meeting that he wants to happen between him and President Xi in about 2 weeks, if I'm not mistaken, may very well not happen. And of course, because China is such an important player, any clash between those two countries will definitely send the market lower, right? And that's precisely what happened. But curiously enough, what happens over the weekend is that the same person that made those tweets then suddenly reverse those comments. And in fact, you can see, because I shared that in a post here in my school community, you can see that over the weekend he released another tweet saying, "Don't worry about China, it will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it, President Donald Trump." And what happened? Let's go to the charts. I'm going to show you here the eToro here because it's easier for me to log in compared to the interactive brokers. And I always use interactive brokers, but to execute all my transactions. But I prefer eToro for educational purposes. And if I flip this to the daily chart, you can see that yesterday the S&P, in fact, the NASDAQ was down 3.27%, which is substantial. So a ton of investors were selling stocks, selling stocks across the board because they were fearful of the repercussions of those comments. Okay, and what did I do? Nothing, because those comments are not going to dictate how the companies that I'm invested in are going to perform over time. And so I released a post in our school community. By the way, if you want access to this school community, it's completely free. You can just click the link that I'm sharing in the description, in this video description, and you can join us where I share here many investment content that will help you stay grounded the Like a Tortoise way. So what happens is that, as you can see, over the short term, the market is a voting machine, but over the long term, it's always a weighing machine based on fundamentals and not emotions. And what really should drive your focus is the earnings, revenues, cash flows, and dividends, not political noise, because these are what's going to drive those returns. In fact, I shared this before. I'm going to share this again. Look at that. Earnings growth moving perfectly correlated with share price appreciation. Yes, over the short to medium term, there can be temporary mismatches, but the long-term picture is quite understandable. All right, and so instead of trying to focus on things you cannot control, focus on what you can control, and that is the quality of the businesses you own, together with the price you pay for those businesses. All right. And by the way, if you invest the Like a Tortoise way, then you will be buying companies with a significant margin of safety. And that margin of safety, everyone, will already account for all the negative headwinds that can and will certainly continue to happen over time. All right. So this is what we should do. All right, and so why should you focus on things that you cannot control? Right. In fact, I was even reading a post by this person here on Instagram, and curiously enough, it's true that Michael Burry, when he posted a tweet saying to sell. Then over the ensuing months, the S&P 500 was sharply higher. And this goes to show how difficult it is to predict what the market is going to do over the short to medium term. Okay, so for example, if I switch to the Schiller PE right here, you can see that the markets have been going straight up from a valuation standpoint ever since the lows of the the financial crisis in 2009. But that doesn't mean they cannot continue to go higher. And sure enough, they have been going up and up and up over the past 15 years, and they can continue to move much higher. Okay, so we always focus on what we can predict, and as I showed you, even in a market as expensive as the current one, we can still find great companies growing through periods of uncertainty that will cause their stock to be at a significant discount to what we calculate to be their intrinsic value. Okay, and by the way, another thing that I want to show you is the Fear and Greed Index from CNN Business. And you can see that most investors are currently in fear mode, which means that investors are fearful, right? And this is not the time that you should also be fearful. This is the time when you should be greedy, right? Because remember, it's fear and extreme fear that cause great companies to go on sale. And this is when we, as long-term net buyers of stocks, should be the most excited about investing. Okay. And the opposite goes when most investors are in extreme greed. This is when we should be fearful, and this is when we should be selling our stocks. In fact, if I go here to give you probably one of the best examples that I can give you is what happened to Alibaba on Friday. You can see that on Friday alone, the stock was down about almost 9%, right? Exactly because of the back and forth between China and the United States. But you can see that today the stock is already up almost 5%. So all the people that were selling because they are clueless about what they're doing here, they are now scrambling to get back in with the stock at much higher levels. All right. So stick to the fundamentals, ignore short to medium term volatility, stay grounded in reality, and you will make a lot of money. As simple as that. All right. So with this, I'm wrapping up the video. And once again, everyone, I do hope you found this insightful. Smash the like button if you did, and let me know in the comments what else you want me to discuss over the next videos. Okay. So yeah, don't use leverage either, because that's certainly a recipe for disaster. Speak soon, guys.